Okay, this WTI oil, crude, whatever you want to call it. I wasn't going to do this because I am actually tired, but as per that post or tweet, should I say, and chart by Robert, what I see on this is a monthly chart. Let's zoom out, see what sort of support level we're at. Yeah, I can see. So this, this is how long it takes. Once you learn how to draw these lines, and I suggest you get this zip to snap to script made for yourselves. I think that Fiverr website does it, or you can get it free on Forex Factory if you're not bothered about having the description put in there. But as you can see now, we've got a big old support level there that we're at, a big support level there. Although having said that, this is in a downtrend, so true support would be a level that creates higher highs. So that's the only thing that's worth noting there. Let's take the scroll off and see what else we've got in there, because I know there was a lot more. Plus, yeah, I've got to be careful because that's the limit of the data on a monthly chart. Well, it does go back to 1999, so 20 odd years. So yeah, that coincides with that level there. We could put it in. And then we can forget about this side here now. Put that in there because that will be relevant. That area there will be relevant when we go down on the lower time frames. We can see these support having acted as resistance there, so they might as well go on at this point as well. There on the red candle, that's covered that. And then if we put one on there, we can see that we've closed through it as well to the long side. That's why I think this may well be bullish, in agreement with Robert. That's closed through there, and that's just a pullback to test this green candle's high there, in my opinion, and these other support levels here. But remember, the nearest levels to the left, in my opinion, are the most important levels to consider. So we might as well put that one on that green candle there, and then the resistance on the high of that green candle there would not hurt. And then we can zoom in. I think I've covered most of the levels there. Might as well put that one in there because we've poked through this one and closed through it, but we haven't broken that one by the looks of it, so that will be potentially quite significant. Yeah, we just tested that one. Zoom in again. Apologies if you can't see this, but because of the zoom, now we should get a little bit clearer. So we're using that there, and then these two here, which is what's happened here. As you can see, the price hit this high, monthly high, and had a little bounce around. It did gap down by the looks of it, closed through it, or opened through it, so I consider that to be a break. Even if this one bounced, the fact that it gapped down before it went down, considered that to be a reversal. We've got a 3 candle reversal level in there, the low of that green candle. This is why this script is so worthwhile. For 50 or so dollars, in my opinion, it's such a time-saving piece of kit there. So that's the 3 candle reversal down. That means it's trended down, high, low, lower, high, lower, low, lower, high, lower, low, and close. We've come back to test that low as resistance. Currently it's held, so we've got to look for those sort of areas, in my opinion, that may cause a problem. What else can we draw on here? Well, we could do some ascending and descending trend lines. This is the most relevant ascending trend line. Actually, there's nothing there. It hasn't created a higher high according to the line chart, but did it do it on the... No, it didn't really. So it's a 1, 2, 3. So it will have some significance, in my opinion, when we come to go long. but might be just overcomplicating things because this move is huge. So then we've got the descending one. We'll do that on the line chart as well. High that made lower lows. This one wouldn't have been attached. It would never have been valid because it didn't make its own lower low. This one's valid because that low was broken by here, in my opinion. So this wouldn't be valid because this hasn't created a lower low. This hasn't broken that low. Hope that's clear. So now long-wise, we're going to have to, that's going to be significant because the 3 candle reversal now, this is the penultimate upwards, this is the ultimate low. We need a break and close above there on the monthly, then a pullback, then a potential continuation. That's what the rules suggest, my rules. So I'm not sure, is this scrunched up? No. Weekly, yeah, I think the whole reason I like it to the long side is purely because of the way, let me see, did I miss anything? No divergence there. Weekly, it was the way it was bouncing off these old resistance and support levels, and that's a good strong bullish candle. That's about all I can say about the weekly chart really. 3 candle reversal down, 1, 2, 3 reversal down, so you could draw a trend line on there, bearing in mind this is a weekly. It looks messy, but it won't look so messy when you get down to the 5-minute and 1-minute charts and so on and so forth. So as I always say, yeah, that's a trend line we could draw there. From there, attaching, basically that's made a new high there, so we're attaching that to that. Or should we attach that to that? That will be a higher low just under there to make a higher high. Not a lot else the weekly can tell us really. As we know, we've got that monthly resistance level above us, a 3 candle resistance high of the monthly 3 CR. Daily, right, we've made a daily 3 candle reversal there. What else have we done? Well, this would be a lower time frame, say on the H4. That is a definite descending trend line there. Might as well slip it on the H4 while we're there. Most recent level is that one. You know, no point drawing lines like that when it's been superseded. You can put it on. That would be that sort of affair there. As you can see, price would have probably reacted to it at that point there, which it did, of course. So back to what's happening currently. Well, we've got a ascending trend line that's been broken to the downside. That made a higher high there, but it didn't on the, or did it? No, debatable. As it is, you can see there's clear divergence to the downside, so that would have been a good short trade. We've now got a descending trend line here that we can draw. So at this point, it's all about make the entry to the long side. So we know we've got the daily. Did we draw a daily 3 candle reversal level in there? No, we didn't. But it has dailied up. That's a higher high. That's the penultimate low. So that's the other reason I like the look of this to the long side, because it's tested the 3CR down, and it held. If this carries on down, then it's a whole new ball game. Just got to wait for it to break up again. But as it is, it hasn't made a 3CR down, so the H4 is now the one to watch for potential bullishness, which would currently be that one there. This is why it's so important, in my opinion, Need to check the levels on those two. Low 269, low 278, so that is the wrong reversal candle high. It's got to be that one there currently. That may all change when the market opens later. So now we are in a situation where this is the critical reversal level, pullback, then maybe a continuation to push on up to test that, and then pull back, push on up. So that's basically my analysis of that crude and why I like it, because it's had that. The most important thing is we've used this daily level, which is there. We're currently using it as support, that whole area there, bottom of those candles, top of those candles, and it hasn't given way yet. Then we've got this other level, I'm talking about this resistance acting as support here. We've got another level of resistance, or if you want to call it supply, that potentially changing to demand. Same here, supply changing to demand. And that's it, guys. So that's my analysis of crude. It's not an idea to trade, it is just why I like the look of that chart. Thanks for watching. Have a great day, or week even, next week.